Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-mini futures for the session of 28th of August. In this video, I'm going to show you the market recap in the last session and also the trade review in the 3 minutes time frame, which I will cover the entry, exits, and the rationale behind. And going forwards, I will definitely cover the bias, some of the key levels to pay attention to, and also my trading plan for the session later. Alright, so let's just get started. As we can see in this daily chart for the S&P 500, so yesterday was another bullish day. But yesterday was a bit different because we have seen the increase of the volume level and together with a bit of the shortening of the upward thrust here. So suggests the presence of supply, but not to worry yet because we haven't seen really bearish results yet. So anyway, let me just get into the hourly time frame and let's talk about what's happening yesterday's session. So yesterday we had experienced a very volatile session, mainly because of the Jackson Hole Symposium and where the Powell just speak regarding to the economy and some of the policies going ahead. So we have seen a lot of the volatile candles and together with the spike of the overall volume session as well. So you can see that this is the opening candle and we just saw this kind of the volatile movement going up and going down, tested and closed near the high and doji candle, and at this time just have a relatively sharp sell-off followed by a very quick recovery, and eventually we just close near the high of the session, which is not too bad. Regarding the prior session just before the US opening, this is a relatively tight range with a very low volatile period. So this is expected because while everyone is waiting for Powell to speak during the symposium, so this is what we'll generally see just prior to a major event. So this kind of the volatility is very much expected and followed by a very volatile session. Alright, so let me just get into the lower time frame, the 3 minutes time frame, which I will just walk through one of my trades. Actually, this is the only one happened during the volatile session during the US session. However, I saw quite a number of the opportunities if you stay through the whole US session. But for me, I only trade during the first 1 to 2 hours of the US sessions, plus the London session as well. But you can see that this is the 3 minutes chart, and let me just zoom out a little bit here, and we can see that just prior to the session, the previous day session was a straight uptrend and followed by this kind of the very tight consolidation just prior to a major event. And subsequently, we have seen this kind of the super volatile session with the spike of the volume as well. So this is kind of expected just prior to the major event. And let me just give you a bit of the context of my trade. So let me delete this. First of all, the reason that I took this trade was just purely based on the level that I was watching. So you can see that I have marked up the dotted line, orange line, which was the previous, the non-RTH high, and this is a non-RTH low, and this is the previous day low, and this is the previous day high. So you can see that this reaction just happened and rebounded from the previous day high level. So it respected the level very much. And let me just zoom in from here, delete this. Okay, so you can see that this is where the US opened about 9:30 p.m. my time. So this is the US opening session. So prior to that, I think this is where the Fed chairman Powell's speak, drive up market, subsequently followed by a reaction. This is the opening session. We have seen the spike of the volume, and during the first reaction, you can see that the price actually responded to the level. This is the previous day high level, and subsequently just see a rally, but this rally just created an uptrust type of the action, temporary commit above the previous swing high, followed by a swing back down to the below the supporting area. And this is where I initiated my trade, so just right after the close of this bullish candle. So why did I open the trade here? And first of all, I mentioned that the level that I am watching, which is the previous day high level and plus some of the non-RTH high low. So first of all, we can see that the first reaction actually respected this level, and second, we saw this reaction comes down to the pretty much same level as the previous swing low, and that actually further confirmed that these levels are definitely a valid levels to play against with. And third, look at the volume here. So let's just focus on these two bearish bars. So this one and the previous daily, the bearish bar. So we see that during this last bearish bar, we have seen this highest spike of the volume. And if we compare it to the previous bar, which is this one, so the volume is slightly lower, but definitely we see that the spread is a lot bigger. If we compare the spread, this last bar here has a smaller spread, and if we compare the distance traveled to the downside, it's pretty much lesser compared to the previous candle as well. So this suggests that there's presence of demand to keep the price from falling further. So presence of demand actually showed up here in this bearish bar, and subsequently we see this bullish volume signature followed by this hammer bar. So these two bar actually provides some kind of the demand to support the price. So especially this, just look at this bullish hammer. So we've seen this temporary commitment below the prior bar low, and followed by a close above and near the high as well. So this is the hammer bar, and this two bar actually presents some demand. So what I would like to see is actually one confirmation. So here comes the confirmation. So this bar actually reversed the prior bearish bar here, and here goes my long entry. And subsequently you can see that we have quite a bit of the good quality demand, and eventually I just put my limit exits at the swing high level here because the session is very volatile. So I just exited all my trades at a very nice reward to risk ratio. Let me just take a look. It's about 1.6, so it's just a very short duration of the trade, and I think it's about half an hour or 40 minutes. So definitely a decent trade for me. And this is the only trade that I initiated for yesterday's session, because during the London Asian session it's very quiet and very low volatility. There's nothing to trade. And for this level, definitely this is one kind of the reversal trade that actually spot the presence of the demand and just enter it based on the reversal type of the signal. And subsequently, if some of you stay through the whole session, you probably have this kind of the short entry, which is I have marked this kind of the bearish wedge, or you call it a ascending wedge or rising wedge. So this is bearish in nature, but the pure or the first principle behind is actually the shortening of the truss. So if you just compare this up wave, so you see the up wave is getting shorter, or if we just compare the trust like this, further commitment, also a tiny bit here, and this one is actually created a lower high here. So definitely we see the shortening of the trust and together with the up wave. So this is a sign of the exhaustion of the demand, and subsequently we see this bearish commitment bar with the spike of the supply. And if this is not convincing enough, and that actually follows by this inability to rally up. So right after this bearish bar, we have this inability to rally up, followed by a breakdown. So definitely I think we can just enter the short right at the breakout bar or the next bar with the big spread bearish bar here. So this is definitely two great short entries to ride the trend down. So this is one potential trade. So another potential trade which actually happened, which actually happened right at the non-RTH low. Let me delete this. Okay, so you can see that we have this bearish sell down here, temporary sell down, and actually reacted at this 3470 area. So if you recall in my video yesterday, I do talk about potential long entry because what I would like to see is actually a test of the last hour bar. So look at where the last hour bar is. So pretty much think 3 to 4, yeah, this is pretty much the last hour bar here. So it kind of tested the last hour bar. Otherwise you can take this spring type of the action as well. This is the non-RTH low at around 3468, and definitely this is a spring type of action of the previous swing low. So either way, I think there is potential to trade to the upside. Let me zoom in a little bit and talk about the volume as well. So first of all, we see that the sell down, this leg sell down actually comes with increasing of the supply, and what we actually normally expected is another test with the decreasing of the supply level. So here comes the reaction as a test of the previous sell down. So we can see that test actually has a decreasing supply level, but compared to the past trading days, definitely the volume or the supply level is still relatively high. But anyway, this is just acted as a test of the previous sell down. So one of the trade could be this entry right at the close of this bullish bar, acted as a confirmation of the reversal, because first we have this selling with increasing of the supply and comes with a test, forms a higher low here with the decreasing of the supply level, and subsequently we have this bullish bar just reverse this kind of the significant or the commitment bar to the downside. So definitely right after the close of this bar can be a long entry. Otherwise, another entry, if you miss this, could be just after this type of the reaction. So you can see we have another reaction down, so as a test of the previous reaction here, and the supply level has decreased significantly apart from this bar, the last bar here. But you can see that we have a very quick recovery bar with presence of the great demand here. So right after the close of this bullish bar, that can become another entry as well, but it's kind of a bit late. Still, you can ride a bit until maybe at the supply zone here. So depending how you manage the trade. So these were the potential trades that I saw. So definitely I think they are the legitimate trades. So anyway, these are the trade reviews. Let me just get back to the hourly time frame and let's talk about the current situation right now. So in my earlier video, I do talk about in the daily chart that the presence of the supply level with a bit of the shortening of the upward thrust. but yet we haven't really seen very threatening kind of the bearish actions. So I guess that we still have a chance to test the up channel, maybe somewhere around here. That's based on the channel that I draw up daily, which will correspond to around 35.40. So it can just go into the overbought or overthrow situation, so maybe even exit the 35.40 to maybe 35.50 or 60, just and then we can just expect a change of character to have a correction down. So this is one of the scenarios that I actually anticipated. Let me just zoom out a little bit, maybe in the 4-hour time frame. So let's just see here. So you can see that I have drawn up this up channel. So one kind of the scenario could be for the price to just continue to travel until the overbought channel, followed by a change of character bar, bearish bar, and start of this kind of the retracement. So the situation could be a bit similar to this type of the action, or even this type of the action as well, and we will just judge from there on. So definitely I think we will see a reaction. Just need to monitor the price closely. Alright, so for the immediate trading plan, the levels that I'm watching is still pretty much the same as yesterday. I think the levels at around 34.70, so 34.70 to 34.80. So this could be a good level to watch, because first of all, we have seen yesterday price action actually reacting quite a lot of times at the level about 34.70. So I think this is still a good level to watch. Apart from that, definitely the previous day high, day low level is the one to watch as well. Let me just quickly move this day low here, and that's the day high, and this is the non-RTH high with the dotted line. So, and this is the non-RTH low with the dotted line as well. So usually these are the immediate smaller levels that I'm watching as well, to see how the price interacts with the previous day low, day high, or the Globex day low, day high as well. And for the structure, still is roughly around 34.70, so around the swing levels here. And to look out for the reversal type of the signal, to go for long, or otherwise to look out for whether we can have some kind of the rejection near the swing high levels, and we can go short. So swing high and this side of the supporting level at 34.70. Alright, so this is my plan, and hope you enjoy my video and get something useful out from it. And if you like it, just click like, and also hover to my name or picture to subscribe or to follow me. So do remember to subscribe to my channel so that you get instant notification of my future video ideas. And as usual, if you have any kind of the questions, suggestions, comments, trade ideas you simply like to share with me or like me to have a look, feel free to comment it below. Alright, I will reply to you. Thanks for watching. I will talk to you soon. Thanks. Bye bye.